Good afternoon, ladies and gentlemen. A warm welcome to the webinar, Cryptocurrencies and Blockchain Technology, Where to Head Next, under the NBS Knowledge Lab webinar series. My name is Deng Xin, an associate professor at Banking and Finance Division of Nanyang Business School. I'm delighted to be the moderator of this webinar, and we are very honored to have three extremely distinguished speakers from regulatory sectors, Blockchain Association, and Web3 investment. First, Mr. Alan Lee, the Head FinTech Infrastructure Office at NAS. Next, Mr. Cha Hock Lai, the Board Chairman of the Blockchain Association Singapore. Last but certainly not least, Ms. Emma Cui, the founding partner and the CEO at Longhash Ventures, Asia's leading Web3 accelerator and venture capital firm. A warm welcome to our panelists. Thank you so much for generously taking time out and making this event happen. For our audience, please post your question in the Q&A tab at the bottom of the screen. There will be Q&A time at the end of the session. After the Q&A session, we'll share a short survey for your feedback to help us understand if we are offering value through NBS Knowledge Lab webinars. Please note that the session will be recorded for archival, informational, educational, and marketing purposes. The recording of the event will be hosted on YouTube and made available for viewing on our website. A write-up on the session will also be made available to viewers together with the recording. Copyright of the recording and the write-up shall belong to NTU. Without further ado, let's start the panel. May I first invite our panelists to share a little bit more about yourselves? So, Alan, would you like to start first?
Sure. First of all, thank you very much for the opportunity to speak with all of you today. So my name is Alan. So I head up the FinTech Infrastructure Office at the MES. So what we've been primarily focused on over the last couple of years is really to look at how we would develop Singapore's financial infrastructure and support, I guess, the move towards adoption of emerging technologies and how would this support the future of financial networks. A key component and element of what we've been focusing on recently has been around digital assets. So that's looking at it from a few lenses. One is, what are the potential opportunities that arises from emerging technologies, digital assets, blockchain being one of them, but also looking at adjacent technologies, things like cryptography, zero knowledge proof, security aspects of the protocol level. How might it support or enable new set of use cases and capabilities to improve how financial services is delivered, increase accessibility to the wider population, etc. In recent days or recent months or years, I think one of the other themes that we've been looking at is, what are the key enablers? Is it that inhibits or supports innovative use cases, ranging from, for example, regulatory clarity, or in fact, just understanding, I guess, the potential of these technologies. So we do support through Regulatory Sandbox as a program, as well as industry-wide initiatives. Some of you may have been part of some of the industry-wide initiatives that we have the opportunity to look into. For example, Project Ubin, which is looking at the application of distributed ledger technology and how it might impact existing payment, clearing and settlement systems. More recently, we had the opportunity to work with the industry on programmable money with Project Orchid, looking into the concept of purpose-bound money, as well as another emerging area that we're looking at is just looking at how blockchain technology, or in fact, digital assets could be applied to reimagine existing capital markets. So those are a couple of key themes that we're looking at. But if I could just end off with perhaps just a keynote in terms of how we're thinking about this space. For us, this idea of innovation goes hand in hand with regulation. So we do believe and focus a lot on this aspect of responsible digital innovation. For us, these two are not distinct, it's complementary. We do need both to exist in harmony, and that's the approach that we're taking. So I know there may be questions on whether we are for a specific regulation or against a specific regulation, for innovation or not. I think both exist, and I'm sure we'll go through in detail some of those finer aspects of some of our thinking behind some of these policy decisions, as well as recent developments in the sector. So maybe I'll pass it time back to you, Dr. Cindy.
Thanks, Alan. Thanks very much. Now can I invite Hotline to give a little bit more information about yourself? Line, you are muted.
Thanks, Cindy. My name is Hock Lai. I'm the board chairman for Blockchain Association Singapore, which is a non-profit organization set up to support the growth of the blockchain and digital asset sector in Singapore. So I wear multiple hats, especially non-profit and pro bono roles, including this role in the BAS. In fact, BAS was founded in 2018 as Singapore Blockchain Association, which subsequently merged with another association called BEST to become BAS. So we focus on three things. We call it the ACE model, ACE. The first is advocacy. Obviously, like blockchain and digital asset is still a very nascent industry. So there is a lot of need to have pro-innovation policies, which is why we do a lot of engagement with regulators, especially with the Monetary Authority of Singapore. So you can see that we are actually quite active in this space, especially for over the last 1 year, which later I can share more. The second one is on community and connectivity. So this is the part on the knowledge sharing and networking events. Again, this is a sector that there are so many new knowledge generated over the last 2 to 3 years. So very often we will organize, let's say, a webinar to share this kind of information. But very often, these kind of events are also events for people to network with one another. The other part on the connectivity is about building international partnerships, because Singapore is actually a very small market in terms of B2C. We only have like 5.6 million in population. So building bridges to many partners over the world, especially in the ASEAN region, is very important. In fact, if you look at many of the blockchain players, right, their market is definitely the region or even globally, because blockchain and digital asset is really a borderless kind of industry. The last piece we focus on is education. Again, like every year we will run conferences, webinars. In fact, you can go to the BAS website. You can see many of our past webinars are open source, and you can view it at your leisure. We also do formal training from time to time. For example, during COVID-19 in 2020, we actually partnered with Singapore Polytechnic to create a SG United skills program on blockchain talent program to create blockchain jobs during COVID-19 for Singaporeans. Yeah, so this is what I'm doing. Thanks. Over to you, Cindy.
Thanks, Hotline. Yeah, very informational. For the people who want to gain more exposures to blockchain technologies and what's going on in the industry. So that is association's role playing in this market. And then next, can I invite Ima to share a little bit more experience the investment in the Web3 space?
Thanks, Professor Cindy, and thanks NBS for hosting this amazing event. I'm Emma. I'm the CEO and founder of Launch Ventures. Apologize in advance, I'm a bit sick, so I might cough on the way. But in short, so we are a Web3 focused accelerator and VC fund with headquarters in Singapore. We started in 2018. Up until now, we accelerated more than 60 projects in the Web3 space across DeFi, GameFi, Metaverse, NFT, verticals, as well as infrastructure. We've also helped those projects raise north of 160 million as of today. Aside from the accelerator, we also have 2 funds dedicated to early stage blockchain projects globally, and following that I've mentioned earlier. So very, very excited to be in this space. And I think if you're a beginner, you're interested in this space, feel free to reach out to us. We definitely want to see how we can support early stage founders. Thank you, Cindy. Back to you.
Thanks, Emma. Thanks very much. And also thanks, Hotline and Alan. So as we know that actually a lot happened in the blockchain and the crypto space last year. So those formerly notable projects and the firms collapsed and failed badly one after another. So there is a lot of debate about actually what regulation we need in this arena. So here in Singapore, then MAS attitude sometimes seems conflicting. On one hand, MAS has been discouraging crypto tradings by the public and the retail investors. And from the ban like last January's marketing and advertising and DPT services, and then the later half of the years, like many proposed measures to kind of like prevent the public and the retail investors get into too much of the crypto tradings. On the other hand, then as Alan just now introduced, MAS actually welcomes the explorations of the feasibility of applications in asset tokenizations, and then facilitating the stablecoins through the sound regulations. And the calls for the collaborations of traditional FIs and fintechs to pilot and explore more accountable framework of decentralized finance. So just want to invite Alan. Could you please share a bit more, like what's happening and how you see the landscape for the regulation of cryptocurrency or the broader digital asset space here in Singapore?
Yeah, thanks for that. I think your last point is especially important. The digital asset ecosystem, I think it's very broad, right? This notion of crypto assets, unbacked or otherwise, I think it's the distinction between, I think, different types of assets, whether it's really an asset class in itself for investment by the retail public. I think there's a lot of complexity in this field, and I think just for somebody that's new to this field, it can be really confusing, right? Just to keep up to date. I mean, I think a number of us actually look at this on a day-to-day basis, but even then, I think there's a lot of evolution that's happening in this space. So it's very complex to navigate. So on that note, I think what I should probably also emphasize over here is that if you kind of look at the digital asset ecosystem itself, right? There are the aspirations towards certain forms of crypto assets. They're looking to be a form of medium of exchange. And there are crypto assets, perhaps, that aim to represent real world financial assets or real economy assets. There are set of crypto assets that aim to represent, for example, ownership or certain intellectual property. So we see a variety of different forms of digital assets. The area that I think we would like to probably emphasize over here is this idea of digital assets that supports, I guess, use cases that ultimately lead to better economic potential and outcome for individuals as well as the economy at large. So I think that's an important distinction. If you look at the digital asset ecosystem itself, one of the key elements is in order to support that, you need a medium of exchange. There's been four perhaps candidates that have been put forward. One is this idea of cryptocurrencies. On the other side, there is this element of central bank digital currencies. In the middle, right, you will see a variety of options in the middle, whether it's securely well-regulated stable coins, or in fact, what we are seeing in more recent time is this idea of tokenized bank liabilities, or tokenized form of deposits by deposit-taking institutions. So if you kind of look across the spectrum, and if you look at cryptocurrencies, whether it really serves effectively as a medium of exchange and a store of value in order to support those economic activities. From our point of view, it doesn't really serve its purpose, mainly because for a number of reasons. One is the volatility of those assets. And if you've been following and looking at the space for a while, you will understand that the prices that been assigned to some of these crypto assets, it's highly volatile, and it's a large part of it is actually down to sentiments. So it's very hard to really predict whether the prices are going up or it's going down to zero. And for that to be used effectively as a medium of exchange, I think it's not going to be very practical. We'll come back to the investment aspect subsequently. So we have cryptocurrencies, we have stable coins. So stable coins take some of those attributes from the original, I guess, crypto technology itself, apply that to fiat, the fiat world that we understand. So with the right set of measures, example, the reserve assets backing, the stable coin itself, that could potentially serve as a mechanism to support use cases such as cross-border payments. Similarly, for tokenized deposits, I think that's an area that we see increasing focus by commercial banks with a slight difference in terms of characteristics. And the central bank digital currency is another element that we see, I guess, the potential. So the reason why I brought up these four is because as we look at the digital asset ecosystem space itself, it's important to understand what are the use cases that we're looking at. Medium of exchange, in order to support those concepts of programmable money, I think that's something that's being investigated by a variety of central bankers around the world. We are taking the approach ourselves in Singapore, looking at the space, not with the view that we need to issue a retail central bank digital currency. That's not the question that we are looking to answer or start with or lead with. We are approaching with the idea that if the future of financial networks are going to be based on digital assets, what's the right form of medium of exchange that would support that? And really looking at across those different variables, different options, and seeing what are the possibilities. So first theme, this idea of programmable money, how it supports use cases. Whether it's things like supporting government disbursements, commercial vouchers, things like supporting escrow, commercial agreements in order to support atomic or rather the delivery of money for a specific purpose. I think those are promising use cases we continue to investigate. The second bucket is this idea of cross-border collaboration, which we are continuing to look into. Under UBIN, Project UBIN, we've started this journey 2016. We've been looking at this for a number of years. We've uncovered through that the possibility of use cases involving how interbank settlement could be performed more efficiently with a notion of atomic settlement. On a cross-border basis, we've announced this initiative called UBIN Plus that builds upon the efforts of Project UBIN in the past, with the idea that there is potential, again, from cross-border collaboration on this notion of wholesale digital currency, which is held or by essentially financial institutions. We're working on a number of different efforts with other central banks, whether it's in Europe, in multilateral organizations, for example, with SWIFT, and others through sandbox and experiments, which we continue to look into and focus on. The third bucket, and I mentioned earlier on about this idea of digital assets. With digital assets or tokenization, I think one of the key possibilities there is, aside from programmable money, or this idea of defining a purpose for how money is to be spent, the third piece is this idea of how assets could be settled instantaneously. It could be assigned such that it could support, for example, how the assets are actually traded. It could be used as collateral for borrowing and lending activities. So a large part of that innovation that's happening in that space, right, quite apart from, let's say, the blockchain protocol itself, or in fact, the asset, which is the stable coins and others. A large part of what's happening, I guess, in an associated field is this notion of DeFi. If you look at DeFi itself, I think a lot of the experimentations or what's happening in, I would describe as the crypto native market today, that's been driving a lot of velocity, a lot of innovation, a lot of changes that's happening in the space. But on the flip side, I think what we will find over there is that some of these protocols, you don't really know who are the developers behind it. You don't really know the roadmap behind it. You don't know whether, for example, the code base that's being released, even though it's open source, has been properly scanned. The controls and measures are in place such that the code that's advertised is in fact the code that's actually deployed. It's hard for an individual investor, for example, that's have access to DeFi protocols to really understand and know what they are actually participating in. Likewise, the changes in some of those DeFi protocols, whether it's the governance token or otherwise, how much of that say gets translated, how much of the vote, for example, an individual has gets translated, not to mention existing risks such as code injection, etc., to the underlying smart contract itself. With that as a framework, as well as associated innovation, things like public blockchains, things like verifiable credentials, I think that opens up the possibility to take some of those lessons that we have learned from traditional finance, as well as some of the innovation that's coming up in this space, and really look at how we can enable, through the possibility of some of the characteristics I mentioned, to support new forms of be it processes or in fact new financial products that are being delivered. So one of the areas that we're investigating and spending a lot of time on more recently is this notion of tokenization of financial assets and real economy assets. So 3 elements: programmable money, cross-border collaboration on atomic settlement, the last piece on this notion of asset tokenization, or you could call it institutional DeFi, with the characteristics of it being regulated. Those are the key things that we're looking at from an innovation side. On the risk side, how do we address, I guess, the emerging risks from those areas? I think we continue to look into the risk that arise from the use of some of these technologies. For existing securities, there are existing frameworks and regulations in place to support that. Perhaps that needs to be re-looked into based on a new set of technologies. But for the other areas, there are regulations or perhaps guidelines that are pertinent for existing financial services, but also the new and emerging ones. Things like anti-money laundering, for example, things like technology and cyber risk, perhaps increase because of the nature of crypto technology itself. This notion of self-custodial wallets versus custodial wallets, the heightened need for individual to figure out how their keys are managed, whereas in the past you would delegate that trust to managing your account to a bank. So I think these are some of the risks that increase. Other areas that we are looking at is this idea of consumer awareness and how we would protect, we increase the protection that we have afforded to consumers or users that are getting into this space. Again, this is an evolving space, and we continue to look at what are the measures to support it. The fourth and the fifth, if I can just highlight a couple of other areas, is just this notion of how do we support well-regulated stablecoins. And fifth is just looking at what the measures that we can take towards or really address or review the possible impact on financial stability. So those are kind of 5 areas, if I can call out, that we are looking at. There are others, but these are just to give you a flavor of what we're doing on 2 fronts, on the innovation side, but also on the regulation side, and how these 2 are really coming hand in hand as far as the approach we are taking over here.
Thanks, Alan, so much. Your sharing is so helpful. I guess before we could always kind of separate, say the crypto or the decentralized finance is token native blockchains from those more enterprise type of use cases is kind of separated the conceptually. But now actually after all this information shared by Alan, I think more or less all these blockchain technologies integrated together, and in the science that we definitely see a lot of potentials of the collaborations of regulators and FIs and the technology part, and can hand in hand and evolving together. Yeah. So next, I'd like to invite Hotline, because as associations usually to facilitate the discussions between the regulators, the market participants, the association is very important and serve this role as a bridge. And then Hotline, I know that you have been calling on the industry, say, to self-regulate, and meanwhile calling on regulators to allow the industry to come up with its own code of practices. And then you also have lots of observations of what's going on in Singapore community and together with other markets. Say recently the Hong Kong, today's Bloomberg News, they actually mentioning that the Hong Kong seeks to revive crypto sector wrecked by FTX debacle. And because usually people compare Hong Kong market and Singapore market. And so I just want to invite Hotline to share your insights, say like either the regulatory part or the market part, like say, what do you think is the best way to build a more transparent and accountable blockchain and crypto community? Yeah, Hotline.
Thanks, Cindy. I can think of 4 ways. First is definitely about actively engaging regulators. As Alan shared, this is a rapidly evolving sector. Both sides of the coins are learning, the industry, the regulators. And in Singapore, we are very lucky, as in like NBS is very, very progressive and open-minded to talk to the industry. For example, I can share that in November last year, there were 2 consultation papers, one on stablecoin and one on more measures to protect investor interest in crypto. The NBS actually engaged the industry associations at least 3 times. So they told me that this is the first time they pre-engaged so many times. So you can see that in Singapore here, we are very lucky that the regulator is very open and willing to talk to the industry players to see how we can better support the healthy growth of the industry. I think the second point is really about industry associations staying united and self-regulate, or what we call as responsible innovation on multiple fronts. For example, I think in the recent consultation paper, there's a call for customer knowledge or risk awareness test. This was something that we actually proposed early last year. And I think this is something that the industry could agree on what are the common questions that will be relevant to be incorporated in these risk awareness questions. And the other thing is really about code of practice, which is quite common in other countries. For example, the marketing guidelines. Those who follow the market in Singapore would know that early last year, NBS actually banned retail advertisement by crypto players. I think one way to address that is that there could be a kind of an industry-wide code of practice whereby the crypto players will abide to, and then I think that will be more effective, coupled with guidance from NBS for the industry to self-regulate. Again, because this is an evolving industry. The third point is really about public education and active enforcement. There are 3 sub-areas I can think of. First is really educating the public about the risk of cryptocurrency. Really is not, I think, an asset class that is suitable for the man in the street. I mean, the non-asset backed kind of cryptocurrencies. And you can see that even despite all these warnings by NBS, right, we see that many people are affected by the FTX saga because they're actually using the FTX services. So I think the second point is really about educating the public of the risk in the engaging the services from unregulated entities. Because if you transact on unregulated entity platforms, right, you will not have the kind of protection than those who are licensed by NBS. The last point is really about having enforcement to non-compliant entities, especially those unregulated entities. Because as you know, in Singapore, crypto players are regulated under the Payment Services Act. If we allow the non-compliant entities to provide service to Singapore, it's not fair to those players who actually comply and are good corporate players. So I think a lot more public education can be done, both ground up and top down. Last but not least, I think is really about staying connected and updated to international regulatory development. Bearing in mind, I don't think there's a one-size-fits-all regulatory approach for crypto, because I think if you look at it, right, even within ASEAN countries, In Indonesia, they treat cryptocurrencies as commodities. In Malaysia, they treat it as securities. And Singapore, we treat it as payments. Even with that, Indonesia now is moving from treating it as commodities to securities. And in Singapore, we start at least the NBS, the recent consultation, is considering to start pulling some securities regulations into regulating crypto. So you can see that space is really evolving very fast, and I think Singapore need to keep updated. And I think in response to Cindy, your question on the competition from Hong Kong, this is a very common question I always receive for the past year, because previously I was running the Singapore FinTech Association. I always say that, I mean, it's about competition, because in terms of geographical location, I don't think we are really competing. And then I think the market is big. And with more players actively coming into the space, more jurisdictions being more open and progressive towards digital assets, I think it is good for the industry as a whole, because as you can see, I think this space is still quite young. The latest report I saw was that there were about 400 million crypto wallets created. So compared to about 8 billion in the world's population, that is just like 5%. So this space still have a lot of potential to grow. But of course, it's not just about cryptocurrency. Like Alan shared, there are stable coins, there are asset-backed tokens. It's not just about cryptocurrency. So that's my sharing on this question. Thanks.
Thanks, Hawkeye. Yeah, really, we learn a few takeaways, say how to build up like this more accountable blockchain community, and then definitely like regulations, educations, and then also like the international regulatory like all these new development all relevant factors. And so next, I'd like to invite Emma. And we are lucky today that we have Emma on the panel, like as Langhash has multiple markets exposure. Like then I'd like to invite Emma to share a little bit more from the point of view of the market participants. Like say the regulation environment could be very important, like for the considerations of market participants. And also I think like different markets, the talents pools, and those are different like market characteristics may affect like the market participants. So can you share like what are your observations like across those different markets? And then what are those most important factors from the perspective of market participants?
Yeah, happy to. Thanks, Professor Cindy. Just to provide some context, right? So our headquarters is based in Singapore. We invest across the globe. So the projects really do come from different geography. And also the nature of blockchain crypto startups is pretty permissionless, decentralized. And sometimes it's hard for a project to call one place home. So sometimes it's also hard for them to figure out where is the right regulator framework to comply with. So I fully sympathize with the regulators, because it's a sector, in my view, is super challenging to regulate, right? The projects, when we deal with very early stage projects and very sensitive nature, I think they do start to want to understand a regulatory framework for the incorporator companies. So what we have observed is they tend to migrate very easily to regulatory friendly jurisdictions, such as the move of a lot of startups from US to Puerto Rico, to Dubai, to Singapore, to Hong Kong. I think Singapore has benefited from that overall trend, right? So because I think as Hawkeye mentioned, the MS and the regulators here are very progressive, very open-minded. So there has been a lot of blockchain crypto players moving over here, set up headquarters or regional headquarters here. But on the other hand, you want to protect, I think, the retails, right? Like Hawkeye mentioned, it's quite hard to separate genuine innovation from scammers out there. So how do you strike a balance? I think it's really the key for regulators. On one hand, you want to have a safe space for early stage innovations to take place, for talents to feel they are appreciated, right, without too much strings attached. But on the other hand, how do you protect the retails that might be serviced by some of those crypto players? I do think like over the years, the regulatory framework has made huge progress. Like in Singapore with the Rollout Payment Service Act, we're thinking of incorporating more security laws over digital asset space. I think there's a trend of more granular regulations over this space. From market participants' perspective, given we deal with very early stage projects, I think the hope from market participants is always a practical and transparent framework, right? Not so much red tapes when they first started, because the startups does not have so much resource or fundings to like the big boys to be compliant from day one, right? So how do you make sure you have a sandbox, safe environment for early stage innovations to blossom, versus how do you regulate later stage players such as FTX, right, or exchanges that are serving millions of users? I think framework has to be a bit more nuanced and a bit more granular. And also, secondly, I think it's important for regulators to understand the technology, because you can't regulate something you don't understand. And the innovations that's happening in the technology is moving so fast, right? If you understand how to read on-chain signals, if you know how to use the right analytics, you will actually have more tools on hand to separate good actors from bad actors. So I think that's a really big thing for regulators to be aware of as well. But other than that, I think regulation always tend to swing from one side to the other side, right? So at one point of time, you might feel it's over-regulated, and then they tend to adjust towards a bit looser environment. So I do think after what happened last year to FTX and 3AC, perhaps a bit more stringent oversight is going to come onto the market, ensure before the retails, the masses are getting better educated and understand the risk that they're getting into, until the whole space are getting a lot more comfortable. Then there will be more sort of like room for innovation. That's my take. Thanks, Professor Cindy.
Thanks, Emma. This is definitely like valuable add-ons. Like now we have complete like sharings like from regulators, associations, and then market participants. So next, actually, I want to move to the next part of discussions. Like, actually, we know that like there are contingent fears as well as high expectations of market rebound in this year, 2023. Like, for example, if you look at the Bitcoin's price this month, rebounded 50%. So then I want to invite all our panelists to share your views. Like, what are your observations on the evolving directions of this blockchain technology and the ecosystem? And what's your view on how this 2023 market is navigating? Yeah, so maybe Alan, do you want to start first?
Yeah, so I think that a lot of the media's attention, a lot of focus has headlines has been around crypto and its use cases, whether it's the prices of crypto or not, right? A lot of attention has been on that. But I think if you look at blockchain as a technology, there's a different set of considerations that exist. And if you just take a look at what's happened last year, in fact, on the enterprise blockchain space, right, quite apart from the cryptocurrencies side of things, we do have, I guess, some lessons learned from some of the, shall I say, reconfiguration and reevaluation of existing enterprise blockchain consortium projects, for example, that have sought to use blockchain technology. So I think kind of thinking about this and also moving forward, I think perhaps a good reflection, kind of moving on to the new year, is really coming in with the perspective of why are we embracing a specific set of technology? Why are we in this space? Are we in this space purely to drive up prices? of a particular asset? Are we here to really solve a problem, to enable greater access, as some of you are advocating for? Are we here to drive greater efficiency in existing markets? So I think it's important to look at that and then figure out what's the appropriate set of technologies in order to support that. So hopefully what we see in 2023, I guess, is a stronger focus on perhaps quite apart from the speculative interest in crypto, but more in terms of the innovation and the value-adding use cases that some of these technologies bring.
Thanks, Alan. I think now is indeed a good time, to build, right? So then, Hotline, can you share?
I think for 2023 will be very much dependent on the macro development. There's a lot of expectation that there could be a recession this year, or it could be a soft landing. But it seems like from the recent numbers, the inflation is cooling. So I think there are room for more optimism for 2023. In fact, there are even expectations that interest rate might even pivot to go downwards in the second half of the year. So related to this is that I think for the crypto side of the industry, because blockchain and digital is quite broad. I think second half of the year, many people will have a lot of expectation about Bitcoin halving in 2024, because usually that will lead to more positive price movement. And also for Ethereum, we will have the Shanghai update in the next 1 month, and also further updates to improve the network capacity of the Ethereum platform, which is the world's computer. So they will be, I think this year, they will be introducing one of the techniques called sharding that will significantly improve the capacity and also lowering down the transaction cost. As for the current crypto winter, what I know is that a lot of, I don't have to repeat, most of you will have seen that many crypto players has actually retrenched. Many of them are hunkering down this year and focus on building. And in terms of regulation, I think we will be able to get a lot more regulatory clarity this year. The outcome for the consultation papers released by NBS late last year, we should receive some visibility in the next few months, I hope. And then I think in terms of some of the subsectors in blockchain that will do well this year will be asset tokenization. That is a part many organizations has expressed interest as a novel way for them to unlock their assets, their hard assets. And then the other development, I expect stable coins to continue to do well this year. Alan talked a lot about the programmable part of money. I think this is the space that I think will get mass adoption, because it will then drive the other subsectors of blockchain. Once you have stable coin, it makes it easy for you to buy tokenized assets. It makes it easy for you to participate in Web3 or Metaverse. And again, I think this year I have a lot of expectations coming from China opening up, and I think for China, Metaverse and Web3 are two areas that the China government is very supportive. So I think we should get some upside from there. Overall, I think for Singapore to do well as a blockchain hub, I think we need to get 4 things right. Basically, the talent policy, capital, we need to still attract a lot of capital. Like in 2021, close to 2 billion or half of all fintech investments comes from blockchain and crypto. And then in terms of markets, we need to have more market access, more demand, including from the enterprise blockchain space. Looking forward to more enterprises adopting blockchain to improve their efficiency. And last but not least is really hope that NBS can continue the pro-innovation policy for the past few years. Thanks.
Thanks, Hotline. Thanks very much for the sharings. Emma, you are from the market side, definitely have a very close observations, what's going on from the market side. Can you share a little bit more like what's the most promising technology components you believe is in this blockchain part?
Yeah, happy to. I think for us, 2023 is a year of hope because I think, like Hawkeye mentioned, right, a lot of the builders are putting their heads down and putting the resource and funding the bull market into building something that's really going to work. And at the same time, because the market turned, all of the, I guess, opportunistic people were turned away. So for us, it's a great year to look into early stage projects that can truly differentiate itself and help them to succeed. So if you look at a much longer time horizon, right, since 2017, the investment in the crypto blockchain space have truly exploded because I think if you look back in 2017, the whole year funding was about 3 billion. 2-3 billion, right? All the way up to 2020. In 2021, the whole blockchain crypto space has raised 28 billion. And that number is a 9 times increase. And this year in 2023, I think it's roughly on par, even during, in 2022, it's roughly on par with 2021. So I think the genie out of the box. So a lot of the talents in Web3 from bigger tech companies, right, like TikTok, Amazon, Facebook, saw the light in crypto and blockchain, and they want to look for opportunities here. A lot of the money, institutional funds are flowing to the space, despite some might be burned by what happened with FTX 3AC, some of those episodes. But I think the general trend is people see the upside in this space, and you have endowment funds, right, Yale, Harvard, all allocating to crypto funds. So I think the capitals are coming in for sure, perhaps at a more cautious pace, and also looking for the right partners in the space. So also, I think in terms of technological trends, as opposed to the last bear cycle where there's nothing you can interact with, it's all theoretical white papers. This time we had breakout applications in decentralized finance, right? I can transfer money, I can manage my money, I can generate yields on top of that, and I can interact with games. They're not perfect. And I think a lot of token models are kind of designed in a way to crash and burn. We're still in the very early days of exploring what is a Web3 native model, but it almost reminds me of the days, I feel like, when internet was first created, right? Every company is looking for ways to incorporate their internet strategy, which is to create a website. But today we know, in hindsight, it's so much more than that, right? So the company's Web3 strategy will be much more than just issue your own NFT. How do you leverage crypto and blockchain to engage your fan base, your customer? I think will become a super important theme in the years to come. And also we see the matureness of the infrastructure. Before, it was largely dominated by Ethereum ecosystem. Now Ethereum ecosystem still is playing an extremely important role, but we've also seen the proliferation of many other layer 1s, layer 2s, different ecosystems with different differentiating strategies. Some are focused on GameFi, some are focused on DeFi, some are focused on metaverse. So I think that's one important trend that we've observed. The second one is a lot more projects are coming out to try to solve for UI UX. Because if you have played with the current decentralized apps, you probably realize how painful it is, right? I think a lot of the teams have come out to try to develop UI endpoint access point to try to abstract away. So how do you make the retailers use a crypto blockchain app without knowing it's powered by blockchain? I think that's what millions of people are trying to solve for. Yeah, so I think the future is bright, and definitely very, very look forward to 2023.
Thanks, Emma, and thanks all our panelists. And so if I quickly summarize, I think there are lots of things we can look forward, like in 2023 in blockchain technology and this community. And I think after the sharings from our panelists, our audience have sent in quite a few questions. Like now I may just start the Q&A section. So I say one question specifically. Actually, our audience raised one very specific scenario. that is the companies who are in blockchain and cryptos are viewed and rejected by banks. And banks view them generally as equivalent to ML, CFT, and this have put a lot of difficulty for technologies and companies wanting to develop blockchain and Web3. So how can the regulators and the industry address this ongoing issue? So I guess can I address these questions to Alan and Hotline?
Yeah, so I think the question is quite broad. And as you can imagine, for any of these cases, it's probably dependent on the specific context and exactly what's the concern for the individual institution that's involved, whether it's a question on the source of funds, for example, or nature of the business. So I think it's hard to comment on that note. But I think more generally speaking, the question then is, what's the nature of the business? What's the broad awareness of perhaps the finer nuances perhaps of the industry, the different capabilities, the kind of offerings that's in play? I think those perhaps would help. I would say the industry in general, whether you are coming in as a lender, whether you're coming in as a individual, as an investor. I think the broad awareness on this on the topic and the different nuances, the different details and color of this industry, I think that will help in general. I think in all activities, in all relations, I think not just in terms of, let's say, dealings with banks in general.
Maybe I just chip in. I've received this question since 2017. It's not just crypto companies, but also fintech companies have this bank account problem. We have provided our feedback to the regulator, NBS, like a year back. I think some players are still facing this challenge, and usually the reasoning are multifaceted. It's not so straightforward. But I think more could be done, both with the banks, with the industry association, and with NBS, because we also must understand there's nothing much NBS can do from the angle, because ultimately it's the bank's commercial decision to decide whether to open a bank account or not. I hope that we could address that more holistically, perhaps when the industry is a lot more developed and mature, and if a player already have a license from NBS, that probably should be good enough reason to grant a bank account. But I have to admit, I mean, this is a common challenge that we face from time to time. Yeah.
Thanks, Hotline. Thanks, Alan. Yeah, I think the following questions is more related with the market. So then can I invite Emma to take these questions? Say, do you deal with FUD, fear, uncertainty, and doubt, especially with weak centralization at the moment? Following all these cases like Luna, Terra, Zoo, and a few more cases. And then how do you draw lessons from those incidents such as FTX and adjust your risk appetites? So that is more or less is a marketing and invest sentiment type of question. Emma, please.
Oh, okay. That's an interesting question. Do you deal with FUD, especially during a weak centralization at the moment? How do each of you draw lessons from news incidents? Okay. Yeah, I think crypto and blockchain is very different market. It's highly volatile, and it's so kind of early stage, right? So and there is cycles that you have to go through. So for us, we started off in the bear market in 2018. So we definitely know what's it like to feel the FUD, because every crypto projects would have been called a scam at one stage, including Ethereum and Bitcoin. So only through time, you will be able to tell the good actors from the bad actors, the people who are truly for the spirit of crypto and technology, and people who are just being opportunistic, right? So I think the way we deal with it is to take a long-term view right? Both from a helping startup perspective and also capital investment perspective, like try to help founders who genuinely have the vision and have the perseverance to persist through a market downturn like this. And also looking for returns from a much longer time frame. I think it's a good way to remind people that downturns are necessary to wait out the weak actors and also scammy actors, right? It's just part of the process, and try to that's one thing. And secondly is proper risk management. Say, for example, some of the projects or funds might have their funds stuck in X, right? But I think it's always important to understand the counterparty risk, market risk, right? And ensure you have enough reserve in different platforms or in decentralized custodies to make sure you can tide through the sort of like the bad seasons, right? And the third thing is, I think, look for a community, because it's all about finding people who understand your philosophy and who see your vision, right? And you need to help each other out. So that's what we're doing at Longhash as well. We run accelerator programs, we organize meetups, events, all that. Want to like ensure good founders can find a home so that they can network with each other and try to push the frontiers together. I mean, of course, it's hard, right? But just because it's hard early, that's why there's lots of opportunities and lots of impact that can be generated. Back to you, Cindy.
Yeah, thanks, Emma. I think time passes fast, like maybe to run things off. If I may, the last question to all three panelists, can you name just like one like use cases or the technology breakthrough you think is most promising, like in this 2023, like just one? Either
maybe
like,
maybe I'll start.
Okay.
I'm looking forward to someone to integrate ChatGPT into blockchain.
This is really interesting. Yeah. So Emma.
I'm looking forward to more industry AI and blockchain. I think that's along the line of hotline, essentially leverage network model to solve data model and also to generate output.
So from our side, I think one of the areas that we are looking at more closely is this notion of verifiable credentials and how that might be paired with existing DeFi protocols, for example, that allows and supports, I guess, more seamless onboarding, but yet have the elements of accountability and transparency, some of these different elements coming together. So I think that's an area that we're keeping an eye on. And again, you know, as in all things that we do, you know, we work very closely in the industry. So look forward to anyone's suggestions on how we can address this and other topics that might come up.
Yeah, thanks, Alan. Thanks, our panelists. I think we are up for time. Let me thank all our panelists again, like Alan, Hawkline, and Emma. Thank you so much for your sharing and support for our NBS Knowledge Lab. NBS Knowledge Lab is our thought leadership platform where we share research highlights and the latest business insights from our highly regarded faculty, industry partners, and alumni. So NBS Knowledge Lab hosts webinar every month. Please follow our website and the social media account for the information. For our audience, thank you again for joining us. The questions you raised are so good. I wish all of you a wonderful week ahead. Bye now.